There's a question I often get here. What should I be buying if I have money? In the last episode, we talked about oversupply in the residential market. Then what about the office market?
The office market actually is still mixed in terms of its data points. So on the one hand, we are seeing that there are still investors interested to buy office space, and therefore the index may be creeping up slightly. But on another hand, the rentals do not seem to be able to keep pace with the price increases.
According to URA Real Estate Statistics, as of first quarter 2019, prices in the office market have jumped 3%, while rentals have dropped 0.6%. That is the first decline since the mid-2017. We still have a supply of 730,000 square meter gross floor area in the office market, and the vacancy rate has gone up to 11.8%. What is happening in the office market?
In the last 4 to 5 years, we've actually seen a proliferation of many co-working space operators, and these have actually added on to a demand of about 1 million square feet of office space. Now, overall, even though these co-working space operators have added on to the demand, they are actually immediately then subletting their office space to the market. And that's why, even though demand seems to have increased, but the office rentals, due to the competition amongst co-working space operators and the competition between them and the traditional landlords to lease out office space, I think rentals have just been flat and in fact decreasing by a little bit. Overall, the vacancy rates at 11.8% is still relatively near to a recession level vacancy rate. In fact, vacancy rates in the past few quarters were a bit higher at about 13% level, and actually that was a little bit alarming because 13% is actually at a recession level sort of vacancy when we compare against the global financial crisis recession as well as the Asian financial crisis recessions. So right now we are not facing a recession, but yet office space has got so much vacant space around Singapore, which means that if the economy were to weaken further and we do enter a recession, the office market is actually very fragile, and prices and rentals are going to be dropping by a lot more.
What about retail real estate?
For retail real estate, I think we are still really struggling against the adoption of e-commerce. Every month now, according to the SingStats reports on retail expenses, we are seeing online spend hovering around 150 million to 250 million depending on the month, and that is going to continue to increase as more and more consumers adopt mobile payments, get comfortable with the logistics services. So we'll be ordering more things online, especially the heavy stuff that we loathe to go to the supermarket to buy and carry home. So on that front, retailers themselves, the tenants of retail shops, we are also seeing, due to competition and due to a shortage in the foreign labor market, that they are actually closing down stores. So in the last 2 months, we've seen announcements by Chili's, the F&B shop, Kenny Rogers Roasters, announcing that they are quitting Singapore. Pablo Cheese Tarts have already closed and moved out of Singapore quietly. And we also see some departmental stores shrinking their footprint in Singapore. Retailers themselves would be adjusting to the competition of e-commerce. So retail space adoption in the last quarter was a net negative 150,000 square feet, meaning there are more store closures than there are new store openings. So we should be very careful about getting into the retail space real estate market.
If I have money to buy now, and I really want to buy something in the market now, what should I be buying from the residential market?
If you really have money to spend and you want to buy something straight away, please focus on then the prime districts, District 9, 10, 11, and focus on getting something that is a bit rare, in this case freehold. Buy something that is very reasonably priced versus all these new launch prices, so that when you buy it, if the neighborhood is launching at $2,000 per square foot and transacting at $1,900 to $2,100 per square foot, but you are able to buy something slightly older but freehold at $1,500 per square foot, you are immediately in the money as far as relative valuation is concerned. Now, that would then be a safe buy, and at the lower entry price, you can, of course, reduce your risk of getting lower rentals or having too much time of vacancy between tenants. So at a lower entry price, you can afford to wait out a bit longer and not get too desperate in terms of securing a tenant. So District 9, 10, 11, freehold, and buy something relatively older. So one category of that could come from the failed en bloc projects. There are a few en bloc projects in the Bukit Timah, Holland area who have tried and then failed to secure buyers for their en bloc sales. These sellers, the genuine sellers within these en bloc projects, would be putting up their properties in the second-hand market. And if they were urgent, pricing for sale at a more attractive price level than what the secondary market might be. So if the secondary market were asking for $1,500 per square foot, a genuine urgent seller might lower his price to $1,400 per square foot. And comparing to the new launches that are coming up due to successful en blocs that are launching at well above $2,000 per square foot, you would have then bought into something that is great value for money below current market prices. And for those who are really in need of buying now, consider that you are using your money to buy for your family's enjoyment. So upgrading from your current property, which may be lacking in space or where the facilities may not be as comprehensive, and then selling it to buy into a better location, Districts 9, 10, 11, or converting from 99 years to freehold, and then waiting out this weak market. So buyers who are buying for own stay, for family enjoyment, this would be a good time to enter.